What's up, everyone? I'm back again, and today we're going to talk about 10 tax advantage that the rich people uses that you might not know about. So, some of these tax advantage you will need to talk to a CPA or a tax advantage professional before you try to implement some of these. And before I go into all this tax advantage, I don't use all these tax advantage, but I use a lot of these tax advantages. The and these are to lower my tax rate to keep more money into my pocket. So the first one I use is pretty simple, and a lot of rich people uses it. So one of the big thing that people use is they use their assets and borrow against their assets. People like Elon Musk, Jeff Bezos, even Mark Zuckerberg uses this for their tax advantage. So what they use is a margin loan. I don't recommend using a home equity line of credit because unless you can get a very good return on your money. So if you use a HELOC, you borrow against your house, and that will give you a way you can get equity without paying the income tax on it. Another one is a margin loan. So a margin loan was typically just given against your stocks, and you will not have to pay on the capital gain on it. You can use the money and borrow it. I don't really recommend this first way, but people use it, and the really rich people, billionaires, use this to get money so they don't have to pay large amount of capital gain. Now, security backed line of credit is the third of the borrowing of your money, and it's not a very uncommon thing to do. And those are the three ways you can borrow really money for your line of credit. And like I said, I don't really recommend this method, but it's something I have to talk about because the super wealthy people really do use this method, and they use it against their stock portfolio, their houses, and whatever method they can get so they don't have to pay the money against it. A prime example, Trump uses this method for the home line of credit against his billionaire mansion, his Trump Tower to get money so then he can invest and pay less money. Because investment, you pay less. Now, the second method is using a Roth IRA. So, a Roth IRA is someone like Peter Thiel, and he used a Roth IRA to grow his investment tax free, and he grew that portfolio into an outrageous amount of money. Now, some of the advantage of a Roth IRA, it grows tax free for the life of the Roth IRA. So forever, as long as you have the account, and it's tax-free withdrawal for qualified withdrawal retirement thing because you pay the taxes when you put it in. They are not going to charge you the taxes when you take it out. And the number three of that is no requirement for minimum distribution, unlike a traditional IRA. I really like it. It's a great method. I am using this method for my future, and I roll over with a backdoor Roth, and I use my 401k to do that whenever I leave my companies. And I can transfer over 30, 40,000. The downside is I have to pay taxes on it now, but it is a great opportunity. So the issue with this Roth IRA is you have to pay the taxes now, and not everyone can do that with the Roth IRA method and the backdoor Roth. So it's all depending on your situation. And I always tell everyone to make sure that you can financially do these type of investment and tax strategies. And before you do it, you really do have to talk to someone about your finances because they can tell you more about it. Now, the other tax advantage the really wealthy people do is capital gain tax. So it's capital gain tax is taxed way different from short-term gain taxes. So long-term capital gain tax is generally typically 0, 15%, or 20% of your income compared to a regular tax. So higher level of income you get, the more tax you end up paying against that income. But with a long-term capital gain tax, it's actually lower. So using your stocks portfolio, instead of selling it this year, you sell it 4 years from now. It's a long-term capital gain. Even though it could depreciate, you don't want to pay the taxes. And people use this for their tax advantage. And the type of long-term stocks and investments I do is the reason why I invest the way I do, so I can pay taxes later on the long-term capital gain, which the long-term capital gain tax is way less. And it's just a method, and before you really look into it and do anything with it, you really do need to talk to someone. Um, I just can bring it the news to y'all, and this is one of the methods I'm using. And the great part about this method is investment properties are subjected to these. So if you hold a investment property for a while, you can save on your taxes. And the other thing is the special consideration. It's your primary residence. You don't have to pay on your primary resident up to $500,000 if you sell your property of capital gain on it. So if you make any profit on that house, you don't have to pay any money because it's up to $500,000 if you're married. So if you get married, you and your spouse buy a house and you sell the house, that's long-term capital gain. And since you are married, you don't have to pay the $500,000 of taxes on it, or you don't have to pay up to $500,000 on capital gain on your house. So that's awesome. So that's $500,000 you get to keep in your pocket, and that's just because you owned a house and kept it for a long time. Now, the other solution you can use is pretty simple, and it is called a private foundation. So if you start a private foundation, you can get tax deduction from it. And you have to have clear outline for your mission. You have to choose a structure for it, incorporate it, and obtain an EIN. There's a lot of legal matters you have to do before you start a foundation. And this is why you see a lot of the wealthy, like even Dave Ramsey, even Mark Cuban, you can talk about Bill Gates, they all have foundations that they use for their tax advantage. It's really one of those things that, oh, they're helping out the community, but reality, they do get a pretty good tax advantage for it. So this is one of the ways that people use for their tax advantage. Now, should you end up doing it? That's up to you, because if you do something like this, you know that you have to donate part of your money to it in a small amount of asset, and you have to know that you can afford it. So make sure you can afford it before you can do something like this. Now, the next one is pretty easy, pretty simple. A lot of people do it. A lot of professional people talk about it, and it's property depreciation. So if you have a rental property, computers, or anything like that used for business, you can depreciate the value of them and get a tax deduction. So basically, on a house, you can, or residential property, you can periodically divide it by 27.5 or 27.5 of the improvement costs over the useful life of the house. And it's depreciate. You can do a special type depreciation, and people use this for their advantage. So you have to really talk to a real estate professional that can help you with this, and a tax professional, because I use this method to depreciate on my rental properties, because over time I have to pay for repairs and do everything else like that. I'm allowed to depreciate the roof. I'm allowed to depreciate the overall structure of the house, and that saves me on my taxes. So it saves me on my normal income tax, which is very helpful for my keeping money in my pocket, to be honest. So if you can keep more money in your pocket, it'll be better off for you. Now, the other big thing you can do is gifting for tax purposes. So what does gifting for tax purposes? So gifting for tax purposes is transferring some of your wealth to someone under the tax title of gift. And you can give it to family and friends, but they are a limitation how much you can give. So I can gift to a spouse, can give up to $18,000 per reception reporting to IRS. So if I'm married, I can gift my wife $18,000, or the same person total of 36. The lifetime I can give someone is $13 million, and you can gift them so that they don't have to pay the taxes on it. And if you give more than the annual exclusive amount to any one person, you need to file a gift return. So talk to your tax advantage and ask them, or tax strategist, and ask them, hey, can I gift so and so money for tax purposes? And you'd be surprised. You can gift for tax purposes and save yourself some money. And I don't use this method because I don't make enough to use this method right now. But I already talked to my accountant and my tax strategist and thought about using this method in the future. So I had to get a clear cut detail on what to do with it. So the next one you should really think about, and that will help you out, is going to be, well, give me a second and let you read this about how the gift taxes for the purpose of tax purposes. So annual exclusion for 2024, you can gift up to $18,000 per recipient. So you can gift pretty much a lot of money a year to this person, and just make sure you follow the proper protocols, and you'll be able to save some money this way. Now, the other one you can do is what you call for a high net family. So if you have a family with a high net worth, you can do a office or family office space, and you can use it as a tax deduction. Now, this is for people with very high income, and with the family with the high income. So these are private companies that manage investments and trusts for a single family. So these family offices, they will get together and talk to you and offer tax advantage for in planning and investment for the family office. So these family office will go under the family revenue and see where you can do it. So they'll probably pull assets for your family office and requalify it for into different tax saving strategies. Now, these tax families, they're pretty much just a office of lawyers and tax strategists. They'll get together and they'll say, hey, this is the best way to structure it for you to save money. And that's one of the one of the things wealthy people do is they get together with professional people. Even though it costs them a few $1,000s, they save more than a few $1,000s in taxes, and they get it more money back in returns, or don't pay as much as taxes, if you file it regularly, you end up paying a lot more. And I had this issue when I first filed taxes. And when I went to a tax advantage person and talked to lawyers, I end up saving $40,000 a year on taxes just because I went to one of these places. Now, the next one you can talk about is taking advantage of IRS accounts or tax advantage accounts. So, a tax advantage account is like a 401k, traditional IRA, Roth IRA, and health savings account, 529 plans, and municipal bonds. And these are all separate things that you will have to figure out on your situation what is best for you. I use a 401k and a Roth IRA. So I use both of them and a HSA account. So I use these three accounts right now, and I'm waiting on my 529 to for my kids to get older because I can convert a 529 that exact same year to save money on my taxes. So it saves me tons of money to put it into these accounts to use it later. But I make sure I can also afford it. So the big part about this tax advantage is making sure you can afford to do these strategies and talk to proper people to get you your situation structured to do these things. The the big part about me doing all these tax advantage are me talking to tax professional and lawyers and getting my situation structured. And these are some of the biggest things I can tell you is I know the tax laws and I understand it, but the difference is I don't study it every day like a lawyer does or residential. This is why I tell you always go to Advantage. Now, the next thing you can do is you can move states because if you move states, you can actually save money because not every state have the same tax rate. And this is where you have to take advantage of your situation. If you live in California and you want to save money on your taxes and you move to a place like Texas, like all these bigger corporations do, you'll save a lot more money in your business taxes. So that's the thing. It's based off your location for some of these tax laws and implementation of your codes. You need to talk to a tax professional. Now, the last thing that people do is charitable donation. I use this one and I can get from a nonprofit donation over $5,000 of equipment I donated to these housing affordability places or these places that are in need. I gave over $20,000 in tools and bandsaws and material to help the people in need to build houses in Houston, and I got a tax deduction from it. Now, I bought all these stuff pretty cheaply, and I get a charge, or they gave me a receipt for more than those items are worth that I can resell it for. But they, the one that gave me the receipt saying this is what we think the value is, and I got a $10,000 or $20,000 tax deduction for that. Now I had to give it to my tax accountant and my tax strategist to make sure that they put it in properly and I can use it for the full amount. But I'm not sure how much I can use it for until tax season comes and the laws stating for that year is implemented, because every year the tax law actually change a little bit. That's why I tell you that, hey, be careful on some of these things you see on YouTube because it might not apply anymore due to the year you are in and it can change due to that situation. Thanks for watching. Like, subscribe. Those are my 10 tax advantage that the rich people uses that not a lot of people use.